Hello, this is Ron Henderson, President and Broker of Multi-Real Estate Services. It's July 24th, 2013, and this is a real estate market update for the San Fernando Valley, Los Angeles, California. The local real estate market is still hot, but there is definitely a change taking place. Here's an overview on what's transpiring, and then I'll give my perception on how the market will evolve over the next few months. The local real estate values have jumped up hard over the past year and a half. Over the past year, we've had over 30% appreciation in the median price of a residential home. The median price in June for LA County was $455,000. If we look at the average sales prices of the single-family dwellings in the San Fernando Valley, we're running $640,000, but there is a disparity in regions. The northeast area, which is Selmar, San Fernando, Pacoima, Panorama City, is running $310,000, while the southwest region, Calabasas, Woodland Hills, West Hills, etc., is running $817,000 with a median price of $600,000. Looking at a chart of the Case-Shiller Index, over the past year the LA region has appreciated substantially compared to the nation as a whole. It's partly because investors value LA real estate and driving up prices, but also in many areas the foreclosure process has been stalled by moratoriums and government intervention, delaying their market stabilizing. The big problem our region has had is the supply and demand imbalance and lack of inventory. Historically, we need around 6 months inventory, but we're only running a fraction of that. Over the past couple months, though, we're seeing a subtle change. The inventory has trickled up. That's normal for this time of year, as many families want to sell and relocate before school starts. This hasn't happened in several years, though. That said, many potential sellers have been holding off on putting their properties on the market as they know their up-leg purchase will be difficult because of the lack of inventory. The quantity of newly opened and closed escrows have dropped over the past couple months, mainly because interest rates have jumped up substantially since the beginning of May. Some buyers were blown out because they couldn't qualify at the higher rates, or higher payment shocks set them back. On a national level, you're hearing about how the real estate market is turning around. That's obsolete information. With the rate of investor participation by crunching 10 years of normal appreciation into the past couple years, my take is the easy money's been made. But even with the hedge fund and international investor purchases starting to slow down, there's still a pent-up local buyer base. Buyers will still have to deal with higher property values, interest rates going up, job and wage growth being stagnant, and loan underwriting and regulations being much tighter compared to prior real estate cycles. Maintaining a strong buyer base going forward is going to be tricky. I don't see a pricing crash, but at some point within the next few months, sellers' frothy list prices and the sales prices are going to have to be adjusted closer to what would be a logical appraisal valuation. Meanwhile, multiple offers and the no appraisal contingency scenario will rule the region for a little while. If you're in the Los Angeles region and have any specific questions, always feel free in contacting me through my website, mres.com, or the email address or phone number shown below. Till next time, take care.